We often hear a lot about the very popular ETFs, especially the S&P 500 ETFs like SPY and VOO. And then of course there's the popular dividend ETFs like VYM or SCHD. So we often overlook the other ETFs that target specific sectors, but are driving factors for not only high growth, but diversification as well. So there's an ETF that I thought was very necessary to talk about now, especially with this new emphasis on infrastructure. This ETF is called PAVE, P-A-V-E, not to be confused with the finance company called Dave, or me, who oftentimes goes by Dave. So this is PAVE, or the Global X US Infrastructure ETF. And this fund, as you can see, is very heavily weighted towards the industrial sector, about 76% weighting there, and another 17% in the basic materials sector. And the number one company in its holdings, weighted at 3.7%, happens to be one of my favorite companies to invest in, called Trane Technologies. Trane Technologies, put simply, is a very large HVAC company focusing on creating energy efficient and sustainable heating and air solutions for homes and buildings. And Trane Technologies currently has a 1-year return of about 59% with a market cap of around 88 billion. So Trane Technologies is just one example of the companies in PAVE's portfolio, just very high quality, fast growing industrials companies, kind of around that small to mid cap range. And the majority of these companies will most likely continue growing throughout 2025. And I don't want to get too political here, but with Donald Trump in office and with him having a former very long career in construction and development, this brings a little bit more optimism towards the infrastructure industry, which could also definitely keep the ball rolling. And that all, of course, really depends on which infrastructure policies are put in place. But anyway, back to the ETF, it does have a fairly average expense ratio at 0.47%, just right below the median for all ETFs, so really not too high when it comes to fees, but definitely not as low as the more popular Schwab or Vanguard ETFs. And it's really not much of a dividend ETF by any means, as it only pays a 0.52% dividend yield, and it's also only paid out twice a year. But with it having such a low dividend yield, I do think that its year-over-year growth definitely makes up for it. Its 1-year return is 29.19%, and starting 5 years ago, it's been outperforming the S&P 500 by about 60 percentage points. But again, that's looking at the 5-year chart. Now, one thing to keep in mind with this ETF is it's not that mature of a fund. Its inception was only in 2017, so less than a decade old, but ever since then, it's been performing consistently well. Now let's talk a little bit about the potential risks with an ETF like this one. So probably the number one thing that comes to mind is that infrastructure and industrial companies are pretty heavily reliant on interest rates, mainly because they need a lot of capital for funding big projects. So if interest rates increase, that also increases their borrowing costs, potentially decreasing their cash flows. And another concern I've heard people talk about when it comes to a fund like this is that a lot of the companies in its portfolio tend to be very cyclical, meaning they'll go through very high growth cycles where they compound over the span of a couple of years, but then they might have a very long cycle where they're extremely slow growing or even decreasing in value for a period of time. But if you ask me, I'm not too worried about cyclicality, mainly because this ETF has kind of proven itself out with a very attractive compound annual growth rate ever since its inception, and has shown little to no signs that it goes through long-lasting downward cycles. So I really do think that PAVE is a great ETF, not only for high growth, but also to add extra diversification in really any type of portfolio. So let me know in the comments below if this is an ETF that you would consider investing in now that 2025 is here, or if you've already been holding it for quite some time now. As always, guys, thanks for watching, and I will see you for the next video.